I think a big question right now, and a very fair question, is can the Fed really pause interest rate hikes with inflation running at multiples of target? And if you look at history, the answer is yes. The Fed has done so many, many times. In fact, it's done so more often than not. And the reason that the Fed pauses interest rate hikes is that they generally see signs of instability in the economy, right? A high risk of, call it a nonlinear decline in growth. And if you look back at history, typically the Fed cuts rates within 6 months of pausing rates, right? And so that's generally when that nonlinear decline in growth, employment, whatever, is manifesting. Then they need to stimulate again. And so we don't see any, when you look at the backward looking economic data, there are no real signs of instability or a big spike in the unemployment rate. When we look at our leading indicators, there is, and we expect that in the back half of 2023. We don't know how privy the Fed is to leading indicators. But the point is, if they do pause interest rate hikes, historically what that means is they're seeing significant signs of risk in the economy, and we should take that seriously.
Right. Okay, so there's that. But then also don't forget the backdrop here, right? Inflation is transitory, that whole thing. The Fed had egg on its face, still does, from that. Now, some people are never going to be convinced of the Fed's credibility, and we'll leave them aside for now. But just from a purely PR perspective, wouldn't it kind of be very difficult to justify rate cuts in light of all that?
I think it does, although I think if you follow the politics of the Fed, the pressure toward trying to get them to pause is gradually becoming greater. And I'll add that at Invictus, we try and stay away from the idea of what the Fed should do, because we're not policymakers, and no one will listen to our policy prescriptions at Invictus anyway. Generally, what we're trying to do is front run whatever we think the Fed will do, given the views that they're expressing to the market at any given time. And so whether it's appropriate or inappropriate to pause or to cut rates, we try not to think about that. We try to think about what they're communicating, what indicators they're looking at, and the weight of the evidence. And I'll add right now, if you look at the FOMC dot plot, what they're communicating is they're not going to raise rates past, or you could say the expectation of FOMC participants is that the terminal rate for this cycle is between 5% and 5.25%.